You are listening to chartingwealth.com for Wednesday, the 20th of May, 2015. As always, we start with IYY. This is a total market index fund. It is an exchange-traded fund, and it tracks the total market. Where are we? On the two-day chart, we have a crossover going up on the MACD. That's the moving average, convergence, divergence. It's the real big indicator that we use here. The light red and green lines are the derivative oscillator. It is another indicator that we use. We don't count on it nearly as much as we do the MACD. You can read more about that, learn more about it if you'll go to chartingwealth.com and listen to all of the different training materials we have loaded up there. You can also find them if you will follow us on Twitter or Facebook. We publish that stuff and more course materials all the time. They're all worth listening to. I encourage you to teach yourself more by listening. Now, we see the derivative oscillator turned over going up today. MACD turned over going up back on the 14th of May. We see that we have 1, 2, 3, 4 two-day candles, 8 days worth of pretty significant up movements in the total market. Now, if we break that down and move back to the 4-hour, which is the half-day chart, you will see that we are well above the 2-day trend line that we drew, and we have continued to have nice, strong up movements. Now, we do look that over the last day and a half, you can tell that there's really not been a rise above the highest of the high, but we still are seeing up movements. We are having a little bit of convergence here. That means a little bit of coming together of these two lines, and the derivative oscillator has moved off a little bit at the end of the day today, but we continue to have up movement. We are in an up movement as far as the 2-day chart and the 4-hour chart goes. Technically, the IYY was down 0.05% for the entire day. But of course, what are we doing? Well, we are looking at the 4-hour chart and we're looking at the 2-day chart, not the daily chart. Why? We like to have a big chart and then a smaller chart, not too small, but a chart that we can track. And you can see that this 4-hour chart crossed over going up back on the 8th of May. Now, remember, the adage, we say it over and over again, sell in May and go away. Why? Because volume tends to leave the market this time of year. People go on vacation, people with big money, and they put it to the side. That means less volume, more volatility, and more choppiness. So we're going to now range back out to the 2-day chart. And we're going to go to SPY. What is that? The Standard & Poor's 500. It's another exchange-traded fund. And you can see that it has had, again, similar, and it is much more similar to the total market than, say, the Qs, which is the NASDAQ, the tech stocks, because it's a lot of stocks in big companies, and it tends to usually be a little closer to the total market. What do we see here? Well, we have a trend line that we've drawn connecting 3 candles from the bottom going up. We also have a crossover going up between the 12th and the 14th. Again, these are 2-day candles. That's what we call these green and red, rectangles up on the top lines. And we see that we are above the 30 and the 34 moving linear regression lines. Those are periods, so that would be 30, 630 of course times 2, since the 2-day chart is a 60-day moving linear regression line, and the red is the 68-day moving linear regression line. So we're above those. The MACD, like I said, crossed over, and we see the derivative oscillator crossing over today. Now let's revert back to the 4-hour chart. What is that telling us? Well, you can see where the 4-hour chart had smaller movements, actually down movement in the afternoon. Overall, the SPY is down 0.03%. We have some convergence between the MACD lines, both the MACD line itself and the exponential moving average 8-period moving average. We see that the derivative oscillator has also slacked off a little bit, but again, we're in up moves technically on all of those, both on the 4-hour and on the 2 days. So the IYY, the total market, and the SPY are both in up trends right now. Now let's Go over to the Qs, which is technically down 0.11%, but we can see again we've got up moves, a crossover going up between the 14th and the 16th going up, and we can tell also if we revert over to the 4-hour chart, we can again see it ending the day with something we call a doji, which again shows some indecision. Again, that's the 4-hour chart, but we are technically still in an uptrend. There's a little bit of coming together of the MACD, so some converging. Looks like the Qs is losing some of its steam, just like the S&P could be in the total market too. A lot of times the market will, if we go back on this 4-hour chart and we look at the 15th, we can see that there was some, what do we call it, trending off, blowing off between the 15th, the morning of, and the afternoon. And again, the market will sometimes digest things. It'll digest up moves and then continue moving again, or it can revert over. How do we know when it's reverting over? Well, we see a coming together and a crossing of the MACD, and we see down movement. It's the opposite when it's going to move up. It crosses blue over red, and we see up movement. So again, that's what we're trying to look for and track. I am now backtracking so that we can look at some of the movements in the Qs that have happened over the last several months. Now, one thing that we talk about when it starts getting choppy this time of year, once we get into May and in the summer months when it gets hotter and people go on vacation, the movements get choppier. But when we go back and start looking at the fat time of year, we can see in February, nice clean crossover going up in early February, all the way up until a nice clean crossover going down in late February, and then down, clean down movements until mid-March, and then clean, crossing over then, and clean up movements until about the end of March, coming into April, and then more down movements. And again, we can look at the crossovers and we see that until we get sort of toward the end of April, our 4-hour chart is a great chart for watching clean up and down movements. That's what we want. What does that mean? Well, when you get good at charting this, you of course want to buy when you see the market moving up. You want to sell when you see the market moving down. So what do? You buy low, you sell high, you wait for it to drop down, you buy low again, you sell high, and you just keep pumping it. You work it like a printing press that you have pumping money out for you. And particularly if you are in something like a 401k, an IRA, particularly if you have a self-directed 401k, what can you do? Well, you can, and particularly if you're dealing with a broker who allows you to go in and out of funds like TD Ameritrade or Charles Schwab, where you can go in and purchase your own funds, your own ETFs that they have at no cost at all, so you don't have a transaction fee. You can actually buy for nothing, let it go up, sell with no transaction fee, let it go down, buy again. Go into cash, go into a money market fund while the market's going down. You do that over and over again, you will see your investment income, well, the money that you have in your 401k, go up over and over and over again, and that's the trick. So again, how do you do that? You pay attention to what's going on in the market, you listen, you learn, you work hard, and you then start being intelligent with your money. Now, I didn't want to turn this into a training session, but the spirit hit me, so I started it. Now, let's go out to the 2-day chart one more time, and we will look at where gold is. Well, look at gold. It has broken the 2-day trend line. Did that virtually in a day. What do we see happening? Well, gold had made some significant up moves starting on the 14th, had broken out, and it appears now on the 19th on the 2-day chart that gold has broken through and could be in a down move. We don't have that confirmed yet. Gold is technically on the MACD been an up move since the 25th of March. It slid sideways for a while. We've talked about on past episodes about how the MACD is not a good indicator for sideways movement. As you can tell, if you look at the MACD on gold between about the 8th of April and all the way until today, the MACD's been in an up move, but when it was sliding sideways, it never crossed over going down, even though you had some significant down movement. Now that it's back to actually moving, the MACD becomes a better indicator. We see that today, even over the last 2 days, the derivative oscillators continued to accelerate up. Let's drop back on the 4-hour chart and just see what it tells us. Well, the 4-hour chart is coming down significantly. It started yesterday, well actually started this morning and continued through the afternoon. The 4-hour chart is actually crossing over going down right now, and the derivative oscillator is too. When both of those coincide, that's a pretty strong indicator, and they're crossing through your 2-day trend line, that you're seeing a real weakening in that up movement, and it is some significant down movement at this time. So we have a 4-hour, a half-day chart that's crossing over going down. And let's zoom into that. It's not technically crossed over. It's crossing, but not crossed over. The 2-day trend is technically broken, but again, barely. We want to see what happens in the morning with gold. If this was just the market digesting some up moves and it's going to go back to going up, or if it's going to continue to plunge based upon things going on in the marketplace. But again, we pay attention to the charts, not to the noise. The charts tell us what's really going on as opposed to the talking heads doing any number of things, trying to sell commercial airtime, panic people, who knows. We want to pay attention to what the market tells us, because these candles and these indicators show us real sentiment and what's really going on. So we've got all of our indices in up moves right now on the half-day and the 2-day charts. We have gold moving back, drawing back on the the 2-day and the half-day, the 4-hour chart. So we're going to really keep an eye on gold, and we're going to keep an eye with some of those pullbacks on the indexes also as we get into trading on Wednesday. Hope that this has been helpful. Thank you so much for listening. We always appreciate your comments, questions, and remarks. Thank you. All the best. Wish you the best in trading and investing. God bless.